Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Strikes across the Israel-Lebanon border intensify. Hezbollah launches more than 100 rockets, missiles and drones towards northern Israel. The IDF also conducting extensive strikes. Stocks in Asia rise on China's stimulus hopes. The PBOC cutting rates as the growth slowdown worsens. Global equities also buoyant after the Fed's jumbo cut. Plus, we take a deeper look into the executives rising within the ranks of the Saudi Sovereign Wealth Fund, the PIF, as they are courted by international investment managers. It's just gone 8 a.m. across the Emirates. I'm Jemana Bersachi in Dubai, and we will be bringing you up to speed on all of the geopolitical developments in the region with the airstrike on southern Beirut happening late Friday afternoon, killing key commanders within Hezbollah, and more tit-for-tat strikes between Israel and Hezbollah over the course of this weekend. But for now, let me just take your attention to markets. And what we are seeing is a more positive handover from Asian equities overnight. We had a cut out of the PBOC. No doubt that's boosting some sentiment, even though what we saw was a bit of a pullback for Wall Street on Friday, both the S&P and Lazard pulling away from those all-time record highs. We're setting up for another major week for markets. We've got the Fed's preferred inflation gauge, the PCE indicator to watch out for later in the week, GDP, plenty of Fed speak, and then switching over to Europe as well, PMIs to watch out for today, which is why we have the euro up on screen. You can see that the euro is trading around the flat line. And then, of course, keeping a close eye on oil. Brent is back at $75 now. So, again, regained a lot of the ground that was lost last week. Switching over to our terminal chart today, and this is just one of the ones that I want to highlight for you, given how much Fed speak is coming up. And you can see that one of the key data points that we're going to be watching out for this week is that GDP. This is actually the third reading. But the reason I wanted to flag it to you is because the second quarter GDP is still 2.9%. And you have to think about that in the context of the Fed's cutting 50 basis points cut last week, and whether or not they will succeed at engineering a soft landing. So far, the data has held up. But of course, there are lots of questions about whether this data can continue to hold up in the coming months. So that's something to watch out for this week as well. But switching back to our geopolitical news. The exchange of fire between Israel and Hezbollah has intensified. The Lebanon-based group launched about 115 rockets, missiles and drones towards vast areas of Israel's north on Sunday. Hezbollah says it was targeting military facilities in retaliation for electronic device explosions last week in Lebanon that killed at least 39 people. Hezbollah says its weapons were aimed at targets as far south as the Haifa area, about 27 kilometers from the Israel-Lebanon border. Meanwhile, Israel says it has carried out a raid on Al Jazeera's bureau in the West Bank after concluding that the news network's offices there were being used to incite terror. The Qatar-based network says heavily armed and masked Israeli forces raided its Ramallah bureau and ordered the office to be closed for 45 days. And just to flag that this morning as well, we are hearing of further strikes out of the IDF into southern Lebanon as well. So the escalation, this round of escalation going on between Israel and Hezbollah seems to be continuing. Well, for more on this, Hasan Alhasan, Middle East Policy Senior Fellow at International Institute for Strategic Studies, joins us. Good morning to you, Hasan. There's plenty to discuss. Let me just start out with your assessment on Hezbollah and how much of a fatal blow they have taken last week with those multiple rounds of explosions, injuring more than 3,000 military operatives there. You had, obviously, the big airstrike Friday afternoon that took out Ibrahim Akil, other very senior commanders as well. How much of a fatal blow does this constitute for Hezbollah?
I think Hezbollah is highly weakened. It has, as you noted, taken multiple blows. Much of its senior leadership has been wiped out in Israeli strikes, including the one you mentioned in Beirut that took out multiple senior commanders of its special forces, the Radwan Brigade. And the pager attack has obviously sowed a lot of confusion and fear and disarray. But Hezbollah is not yet defeated. And it clearly retains the ability to show and demonstrate. The issue is that I think Hezbollah obviously has to maintain a level of response. It has to be able to be seen as being still in the fight. And at the same time, it's, I think, the party that does not want escalation at this stage. It's clearly Israel Israel that I think sees an opportune moment to attempt to degrade Hezbollah and push it north of the border in an attempt to create a wider buffer zone separating Israel from Iran. And so I think Hezbollah is in trouble. There is a high degree of confusion. It's infiltrated in the sense that operational security seems to be a massive challenge, and this has had major repercussions on the survivability of its leadership. But it's not totally defeated yet. I think the question is where Israel goes from here.
Let me ask you what you think Iran's calculus is, because for so long, Iran has viewed Hezbollah as one of their assets, but also a strategic asset of deterrence in the region. But what we're seeing now is Hezbollah are getting dragged in to what could be a potentially very hot war. Does this put Iran in a more vulnerable situation, and that they will have to do something to protect one of their key assets?
That's right. The tables have turned in the sense that Hezbollah had traditionally acted and operated as Iran's major deterrent against an Israeli or a U.S. attack, meaning that Hezbollah was seen as the insurance policy that could hold Israel at risk. The issue, I think, now is that it's Hezbollah that's being held at risk by Israel, and so it's Iran that feels the need to protect Hezbollah and to act as somewhat of an insurance policy for Hezbollah. Iran doesn't want this escalation either, because I think it realizes that with the U.S. firmly backing Israel, it simply wouldn't have escalation dominance. And I think that's partly why Iran has yet to respond, despite its highly bellicose rhetoric, to Israel's assassination of Hamas's political bureau chief, Ismail Haniyeh. Iran simply doesn't have many options at its disposal at the moment. You'll see Iran-backed militias in Iraq escalating at the moment in order to deter Israel from a wider offensive in Lebanon. The Houthis will escalate every once and again. But again, the added effect of these minor escalations from Iraq and Yemen are somewhat limited, given where we are in this wider confrontation at the moment. And so, in a sense, Iran really, I think, has a limited set of options at the moment. And all it can do is try and remain in the fight, minimize the risk of escalation, and hope that politically it can wait out Netanyahu, that there might be a change in government in the United States or in Israel that could end up changing the situation on the ground.
Yeah, let's talk about the United States. I just want to play a bit of tape from the U.S. National Security Council spokesperson, John Kirby. This is what he was saying overnight.
We have been involved in extensive and quite assertive diplomacy. We are watching all these escalating tensions that have been occurring over the last week or so with great concern, and we want to make sure that we can continue to do everything we can to try to prevent this from becoming an all-out war there with Hezbollah across that Lebanese border.
So the U.S. want to do everything they can to prevent this from turning into an all-out war. Can they, and do they have the leverage?
Most certainly, the U.S. definitely has the leverage over Israel, to be sure. The U.S.'s continued support for Israel is absolutely vital and critical for Israel's ability to continue waging war on multiple fronts. And obviously, in terms of munition, in terms of the provision of arms supplies, in terms of the protective role that U.S. assets in the region play. Obviously, U.S. support is absolutely critical. The issue is that I don't think that the Biden administration, or perhaps any administration, really has the political will to enforce these red lines and to restrain and to rein in Israel because of domestic political calculations. So ultimately, the United States as a nation, as a country, most certainly has the leverage. The question is there an administration, is there a president that's willing to utilize this leverage to rein in Israel, which clearly has been the main driving force behind the escalation? So I think it's a question of political calculus, more so for the administration, more so than a question of whether the U.S. as a whole has enough leverage to rein in Israel.
I thought it was quite notable last week when Hasan Alhasan spoke that he explicitly made a link between what was happening in Lebanon and the developments in Gaza. He said, we are not going to stop launching the attacks on Israel in the absence of a ceasefire, or if he said, unless Israel stopped bombarding Gaza and the West Bank. Those are his words, of course. To what extent do you think the ceasefire deal unlocks the key to things de-escalating in the region at this point?
Let's remember that the reason why Hasan Nasrallah and Hezbollah came into the fight in the first place was to demonstrate solidarity with Gaza. And this is obviously the idea of the so-called unity of fronts that Hezbollah and the axis of resistance, the Iran-backed axis of resistance, has talked about, meaning that if one of the members of the axis of resistance, say Hamas or Hezbollah, enters into a conflict, everyone else mobilizes in Iraq and Yemen and elsewhere in solidarity. Israel obviously is trying to decouple the dynamics in Lebanon from the dynamics in Gaza. It's trying to bring Hezbollah to its knees, to get Hezbollah to want to negotiate a ceasefire independently of what happens in Gaza. And obviously, Hasan Nasrallah's words are a reminder that Hezbollah will remain committed to this unity of fronts, that it will only cease its military operations once a ceasefire agreement in Gaza is reached. And so I do think that a ceasefire still remains the single best, simplest solution for a wider de-escalation in the region. We've seen Hezbollah abide by the ceasefire that had taken place late last year, and they abided unilaterally by it. They ceased military operations in November, I believe, last year, when a temporary ceasefire deal was reached between Hamas and Israel. So I think there are multiple indications that if a ceasefire deal were reached in Gaza, then we would see a de-escalation across the Lebanese-Israeli front as well.
Yeah. That certainly appears to be the thinking. Hasan, always great to chat to you. Hasan Alhasan, Middle East Policy Senior Fellow at International Institute for Strategic Studies. Thank you. Well, still ahead, we will be speaking to Chief Market Strategist at Lazard Asset Management, Ronald Temple. We're going to be talking about markets, and he says no more outsized rate cuts in 2024. This discussion next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersacci in Dubai. Chinese authorities may be preparing for more stimulus measures after the PBOC cut the 14-day repo rate this morning and announced plans for a rare briefing on the economy. It follows data from Friday reinforcing slowing momentum in the economy, and a separate Bloomberg survey shows analysts favoring a property sector rescue as the best stimulus option. So we are seeing a bit of a bounce in terms of risky assets in the handover from Asia Pacific. But of course, the focus for markets last week was all on that Fed rate cut, 50 basis points in the end. So to analyze the market reaction and also the Fed's thinking from here, let's bring in Ronald Temple, Chief Market Strategist at Lazard. Great to have you with us. So was the Fed right to cut by 50 basis points last week?
I think they were. In full disclosure, I did not think they would cut by 50. I mean, I saw the market was pricing.
Well, the market was pretty split.
It was split. Yeah. And I genuinely believe when they went into that meeting, there was probably a lot of debate where they were trying to figure out the right call, where historically they've already decided what they're going to do and they guide the markets. And so I think it was the right call. It was an insurance policy, in my view, because inflation had come down sufficiently. They probably should have started cutting in July. And I look at this as catching up. But more importantly than the cut, I think, was the messaging around the cut. Jay Powell really needed to make sure the market did not think that something was wrong. And he reiterated repeatedly how strong the U.S. economy is, which I agree. But again, made it clear that they were recalibrating, a word he used quite a few times.
So it's funny because the day before, the day of the Fed meeting, we had a guest on the show. And one of the questions I asked was, if they opt for the 50 basis point cut, is the market going to interpret it as the Fed seeing data as a lot worse than the rest of us? Do they know something that the rest of us don't know? Will they read it as something that could be quite negative and foreboding for the economy? And in fact, what we saw was a very bullish market reaction to that 50 basis point cut. And do you point that down to purely the messaging afterwards and the fact that he said, look, don't get used to these type of jumbo rate cuts because we are going to be cautious?
Well, I think it was interesting because the day of the cut, the markets were a bit wobbly. And it was the next day after people got a chance to sleep on it. I think they woke up and said, this is a good thing. I mean, there were really three reasons not to do 50. One was the fear of scaring the market. The other was the fear of admitting you're behind already. And the third was the risk of appearing political. And I think they managed all three of those in the messaging. And I think for the markets had time to kind of to digest this. What's interesting to me about the market reaction, by the way, is the Fed's summary of economic projections, the dot plot, basically showed very clearly that 7 of the Fed members, I believe, had 1 more 25 basis point rate cut by year end. 9 had 2 more 25 basis point rate cuts. The market is still pricing 3.
Yeah.
And only, I believe, 1 person had 3 rate cuts by the end of the year. So the market listened to Jay Powell on the messaging of the strong economy, but is ignoring him and the rest of the Fed in terms of them saying, this is not the new normal. We're not going to be doing 50 a time every meeting.
Does it really matter, though? So that the markets are pricing in an extra 3. If they end up cutting only once more, does it actually matter for these stock markets? We're sitting close to a record high.
Great point. I mean, from an economic perspective, 25 versus 50 doesn't move the needle that much. What's more important is how far will they go in the full cycle? And the market is still saying you're going to get another 183 basis points by the July 30th meeting. I think that's too aggressive. The Fed, again, their own summary of economic projections says they're going to stop around 3.25 to 3.5. That's been my view for quite a while, is that's about the trough of this rate cutting cycle. And the reason I believe that, by the way, is the economy is strong. So you're going to go from restrictive territory back to something more neutral. I don't think the Fed's going to need to go into accommodative policy or trying to stimulate the economy. So in that regard, I think it does matter, because if the market's expecting all of this stimulus from the Fed and we don't get it, maybe there's a little too much optimism there.
At what point does it, I mean, you mentioned the elections coming up, and obviously that's huge, a huge political event. But at what point are markets going to go back to focusing on the size of the U.S. deficit once more?
Well, I think the size of the deficit is a problem regardless of who wins. Neither candidate has really sketched out a credible plan to significantly reduce the deficit. And I do worry, it seems, at this part of the campaign season, increasingly it's a competition to see who can hand out more money, right? Kind of typical politicians. The forecast for the next decade from the Congressional Budget Office is deficits every year of at least 6% of GDP. And by the way, if you adjust those for the tax plans they've announced, it's probably 7% or greater. It's not sustainable. One of my worries is it's hard to predict what will cause that to break, but at some point it probably will. One worry I've had is Donald Trump has talked about decreasing Fed independence. At one point, he speculated maybe the Fed should have to get presidential approval to make rate changes. He's talked about firing Jay Powell. That could be a tail risk in markets. I don't think it's likely. I think it's low probability. But maybe that's one of those things that could actually really rattle the markets if you have these large deficits and there's a perception that the Fed is no longer independent. That's very worrisome.
Does that mean then, putting everything we've discussed together, that the steepener, the yield curve steepener, is still the wise trade to have on right now? You've got the shorts on the long end in anticipation of these wider deficits, but then you're long the front end in anticipation of the rate easing cycle.
Yeah, my view of fair value on the U.S. 10-year Treasury is it's probably got a 4 in front of it, not a 375. So I do think betting on higher yields at the long end of the curve makes sense. So I've been negative on long duration for some time now. Prefer to be in that kind of 3 to 5 year part of the curve, preferably in credit. And it's hard to say that. I feel like I make a face when I say it because credit spreads are so tight. But, I think recession risk is low when you're getting that yield pickup without taking the duration risk. And the longer the U.S. keeps running these deficits, the more there's got to be upward pressure on those long-end rates.
And what do you see happening with the U.S. dollar here? Because it's not just the Fed cutting. You have central banks all around the world cutting as well. So is it a race to the bottom?
Well, in my view, currency rates are all driven by changes in expectations of interest rate differentials. The market is expecting too many cuts, in my view. So that argues that as the market recalibrates, if I'm right, that you get fewer rate cuts, which means a stronger dollar on the margin. And then the election really does matter in this regard. And historically, I've told people not to lose too much sleep over U.S. presidential elections because one person can't steer a $28 trillion economy very vigorously. But in this case, Trump has talked about major tariffs on all of the trading partners of the U.S., which could increase inflation rates in the near term, decrease the Fed's ability to cut rates, and further strengthen the dollar. So I think the election may well be important to the move of the dollar. But near term, I think a little bit more strength. Longer term, structurally, I'm more negative on the dollar because of those deficits we just talked about. It's at some point, you have to be more fiscally responsible.
Well, like that, the narrative is complete. Ronald, thank you so much for joining us today on the show. Ronald Temple, Chief Market Strategist at Lazard. Well, coming up, the Danish Prime Minister is welcoming Europe's shifting tone on migration. We hear from Mette Frederiksen on what her government is looking to achieve. Next, this is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jemana Bersachi in Dubai. Danish Prime Minister Mette Frederiksen says it's right that other governments in Europe are shifting their tone on the need for more stringent migration controls. Frederiksen told us exclusively why she thinks the issue should be a top priority.
It is changing a lot, finally. Thank you, dear colleagues. We should have changed the rules and the legislation in Europe a long time ago. It is actually because I am a social democrat that I'm quite tough on migration, and of course especially on irregular migration, because if too many people from outside Europe enters Europe, the problems with lack of integration will simply be too big and too massive. We have to be, unfortunately, quite tough on migration. We have to be in control with our external borders. We have to be able, as leaders, to say if people come to Europe and if they commit serious crimes, then we should be able to tell them to leave Europe again.
That was the Danish Prime Minister Mette Frederiksen speaking to our colleagues at Bloomberg. And a quick look at markets before we head to the break. What is going to be yet another pivotal week as markets digest that Fed interest rate cuts and also a PBOC rate cut and the reverse repo rate, the 14-day reverse repo rate overnight. That is setting the tone. And as you can see, as we head into the European session, S&P futures, NASDAQ futures are pointing towards the green, up 0.6% higher. The Euro Stoxx futures in Europe also pointing to a higher open, up 0.5%, keeping a close eye there on some of the political developments with Michel Barnier, the French Prime Minister, announcing the composition of the government there, and then also a win for Scholz's SPD party in regional elections in Germany. We're going to talk more about that on the show in a short while. But that is the picture as we head to the break. Coming up, the UAE president is on his first trip to Washington as the country's ruler. More on what is on the agenda next. This is Bloomberg. This is Horizons Middle East and Africa. Our top stories this morning. Strikes across the Israel-Lebanon border intensify. Hezbollah launches more than 100 rockets, missiles and drones towards northern Israel. The IDF also conducting extensive strikes in Lebanon this morning. Stocks in Asia rise on China's stimulus hopes. The PBOC cutting rates as the growth slowdown worsens. Global equities also buoyant after the Fed's jumbo cut. Plus, we take a deeper look into the executives rising within the ranks of the Saudi sovereign wealth funds, the PIF, as they are courted by international investment managers. It's just gone 8:30 a.m. across the Emirates. I'm Jemana Bersachi in Dubai, getting you up to speed on some of these markets today before we talk about some of the other developments that we're watching in the region. But for now, markets are trading in the green. We had a positive handover from Asia this session after that PBOC rate cut came through. And even though Wall Street slightly ended in the red on Friday, we are talking about pulling back from all-time record highs once again for the S&P and NASDAQ. Today, you can see a lot of green on the board as well. Brent also about 0.8% higher. It's been steadily climbing back higher over the course of the last 2 weeks, given all of the geopolitical developments in the region. That's underpinning where energy is trading. But you can see that Brent is now back to $75 a barrel. And then the euro trading sideways today at 111. Focus later on some of the PMI numbers coming out of Europe, in addition to, as we spoke about, some of those political developments with Michel Barnier announcing his French government, the composition of the French government, and the huge task ahead to rein in some of their deficit spending. Switching over, I also just want to draw your attention to some of the data that we have this week. We're going to get plenty of Fed speak. So the members of the Fed are now able to go out and deliver these speeches and do these interviews. So we will get a lot more color about how the Fed came to that 50 basis point cut decision. But later in the week, we will have the PCE, which is the Fed's preferred inflation gauge to watch out for. And then we also get a revision of the second quarter GDP. It's actually the third reading. And you can see from this is that it's still tracking around 2.9%. And so, yes, we talk a lot about the deteriorating economic backdrop in the U.S. But if you look at the most recent GDP numbers, they're still pretty lofty. 2.9% is where we're at. And granted, it is a backward-looking indicator. But when you talk about the Fed and how much incremental easing, loosening this economy may need, a 50 basis points cut juxtaposed with that seems an interesting move. So something to bear in mind. All right, let's turn to Saudi Arabia and its sovereign wealth fund, which is a key vehicle driving the kingdom's plans for economic transformation. As the PIF focuses on domestic investments, it's grooming a once low-profile executive to manage deals with international firms looking to invest. Yazid Al-Khumaid, who is one of the fund's 2 deputy governors and runs its Middle East and North Africa unit, regarded for years as the less glamorous arm. Well, now that's changing. For more, Matthew Martin, our senior reporter for Middle East Wealth Funds in Riyadh, joins us now. And it is a public holiday, so thank you, Matthew, for making the time for us to talk us through your very interesting profile piece today. The question I want to ask you is, what does it tell us about the PIF's priorities that they're choosing the deputy governor who has direct responsibility for Middle East and North Africa as one of the rising stars?
Yeah, I think, if you cast your mind back sort of 2018, 19 and 2020, this is a time when the PIF was spending tens of billions of dollars on these really big, high-profile international investments. And that was really the time when, the PIF's international reputation was rising. People were getting to know more and more about the fund. It was seen very much as, all of the money was going outbound. Now, what we see, and, the PIF is on record as saying that the bulk of its investments are actually going to be going domestically. The focus is on trying to develop the Saudi economy and trying to attract businesses in that the PIF will partner with to invest inside Saudi Arabia. So Deputy Governor Yazid Al-Humaid, his group is now rising increasingly in prominence. We saw that earlier on in the year when he was the person who was signing this $5 billion check that the PIF wrote to BlackRock and to Larry Fink for BlackRock to come and develop their business inside Saudi Arabia. And we're expecting that, this is really going to be, he's going to be the character who is really behind it, cementing and developing more of those types of partnerships with international businesses as the PIF pivots away from a lot of the money going outbound into focusing on investing inside the country.
One of the quotes that jumped out to me from your article, Matthew, is a remark that he made last year where he said foreign outfits should set up not just their reception desks, but their kitchens. So, again, it tells you a lot about what Saudi Arabia are trying to achieve here. But let's also ask about what this means to their international portfolio, because in the past year, they can point to several successes. And, of course, global stock markets, we were just talking about that, going from strength to strength. The investment in Newcastle seems to have paid off as well. So how should we view this new refocused ambition with what is happening with their international portfolio?
Well, the PIF insists that, international deals are still going to be happening. They're still going to be a big focus for the fund. They say that they're going to be investing $50 to $70 billion a year. And although the bulk of that is going to be going locally, then there's still going to be several, at least $10 billion, perhaps more, of capital that's going to be invested externally. And so, we're still going to see those big international deals happening, but the focus clearly is going to be on Vision 2030 and on making sure that Crown Prince Mohammed bin Salman, who's the chairman of the PIF, his vision for developing and diversifying the Saudi economy by 2030, that those goals are met. And the PIF is going to be the big driver, the big source of capital for making sure all of that happens. And so we'll see as the PIF develops some of these local entities, so even though some of those will be investing abroad, they will be investing through this MENA group which sits under Deputy Governor Yazid. They will be investing abroad with a goal of bringing businesses and bringing talent back into Saudi Arabia. So, we're still going to see the PIF do things internationally, but there's going to be an increasing focus on doing things internationally that will benefit the Saudi economy.
Yeah. And Matthew, given how closely you track the wealth funds in the region, not just PIF, but others, how do you think they're thinking about this 50 basis point rate cut out of the Fed from Friday? What does that unlock for them in terms of opportunities?
Well, I think, there's a couple of things in there. I think, the big thing has been over the past few years, and, we've talked about this in the past, is that because of high rates, because of the impact that's had on some of the big asset allocators in places like the US and Europe, it's meant that they've pulled back to some degree from contributing to new fundraise and new deals that have been going on. And so the Middle East wealth funds have really stepped into the gap, and they've stepped into that gap and also had some demands as well about what they want to see the likes of the BlackRocks and the Apollos doing for them in the Middle East. Now that those rates are coming down, we might see some of those big pension funds in the US becoming more active, which means that there'll be the wealth funds will be a less important part of the overall sort of global capital sources. I think the other thing, of course, that we'll see is that it's going to lower cost of capital for everyone globally. So the Middle East sovereign funds, a lot of them are not so much sort of debt funded; they're funded from oil revenues from the government. So this doesn't affect them. It's more in the fact that it's going to boost those sorts of animal spirits in markets, which they're going to be trying to go out there and take advantage of when they can. And, we've obviously seen them already being very active over the past few years in terms of investing into stock markets. And so, now the question is going to be, will they, over the next few years, the investments that they have been making, are they really going to make big returns as they come to fruition in the next 3 to 5 years?
Yeah, always going to be a big question. Matthew Martin, thank you so much for joining us today, our senior reporter for Middle East Wealth Funds in Riyadh. And for more of these stories looking into the intersection of wealth and power in the region, sign up for our Mideast Money newsletter on Bloomberg.com. The newsletter comes out around 4 p.m. Dubai time on Mondays. Now, the UAE president is on his first trip to Washington as the country's ruler. Sheikh Mohammed bin Zayed is set to hold discussions with President Biden and Vice President Kamala Harris and meet with executives of large U.S.-based firms. While the leaders are likely to discuss the developing conflict in the Middle East, a UAE diplomatic advisor says the talks will prioritize economic ties. So for more on this, Abir Abu Amar, Bloomberg's Middle East economics and government reporter, thank you so much for joining us on the show today. Interesting timing for MBZ to be paying this trip to the U.S. now. It's not that long until we've got U.S. elections. Why is he paying this trip? And I believe it is his first official trip as president.
Definitely, Joanna. So, and we were at that briefing with Anwar al-Rikash together, and that question was the first question that came up about the timing, right? So I just want to point out that economics on top of politics seems to be the UAE's unofficial mantra lately, where, the UAE, throughout their multiple economic agreements with new countries in Asia, in Latin America, in Africa, seem to be putting the economic agenda ahead of politics. And that was certainly the message that Anwar al-Rikash had sent, right? MBZ is starting his trip to Washington today to meet with President Biden, Vice President Kamala Harris. As you mentioned, the main purpose of the trip is going to be to discuss the UAE's bilateral trade, the UAE's economic agenda, to discuss AI. AI came multiple times during the briefing where Gargash told us that it's going to be on top of the agenda. Now, that does not mean that, the geopolitical situation is not going to be discussed. Granted, the UAE's sort of unofficial role in the conflict in the region between Israel and Hamas is going to come up, but it's not going to be the priority. Now, in terms of the timing, Anwar al-Rikash sort of played it off. He just said, you know what, this is the president's first official trip to the United States as ruler of the country. He's met with Biden and Harris multiple times before, but this is going to be the first time he goes to the U.S. in the capacity as the ruler of the country.
Yeah, you've got to wonder as well whether a visit to former President Trump is also in the cards, given he's in the U.S. this week. We don't know yet, of course. Given the focus for artificial intelligence, and I was actually at one of the AI conferences over here in Dubai last week, it has been a huge focus of the UAE government, and also a lot of focus on G42. They've inked many deals with Microsoft earlier on in this year, and then also potential talk about some form of a partnership in NVIDIA as well. What are we likely to hear from this trip on that front?
Right. So, I mean, in terms of the NVIDIA deal that came with G42, it actually came on the same day as the briefing. So we had a news flow of hearing about the UAE's goals in the wider AI industry. And so the NVIDIA deal with G42 is essentially creating an Abu Dhabi-based climate tech lab, which is going to focus on more sophisticated ways to forecast the weather and the climate using NVIDIA's Earth 2 product. Now, we don't have a money sum attached to this, but we know that, Semaphore reported earlier, Jumana, a couple of weeks ago, that the U.S. had approved the sale of chips from NVIDIA to G42, which might be big news if true. We know that G42 had a deal with Microsoft, and one of the biggest sort of government-to-government negotiations in that deal was for G42 to pair all existence in China. So this is a sticky point, right? The whole U.S.-China trade tensions and how the UAE and other countries are caught in the middle. So the UAE has, or G42 has agreed to pair all existence in China to be able to secure those kind of deals with Microsoft, with NVIDIA, and we're seeing that happen. So it is going to be a big part of the president's visit, and it's going to be part of the primary discussion.
And it also underpins the conversation that we had with the advisor last week, where he was saying that the two main goals right now for the UAE are development in artificial intelligence and also big focus on climate tech as well, given global warming. So it is a priority, of course, for leadership there. So interesting. Abir, thank you so much for the preview on what to expect out of MBZ's visit to the U.S. That was Abir Abu Hamad. Now, coming up, Olaf Scholz says Social Democrats hold a slight lead over the far right in the latest German state elections. We're live in Berlin. Next, this is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. In Germany, Olaf Scholz's Social Democrats have held off the far right in elections in the eastern state of Brandenburg, according to preliminary results. A win would spare the chancellor and his party from another embarrassing electoral setback. Let's bring in Bloomberg's Olivia Crook, who joins me from Berlin. So just talk us through these results. Was the SPD expected to actually clinch victory and hang on to this particular state, or were people expecting defeat similar to what we got back in Thuringia a couple of weeks ago?
So listen, looking at the polls going into this election, it was the AfD that was leading by a couple of points, but it was very close. And the reason, Jumana, that this is such a sort of critical part of Germany, and this is the state of Brandenburg, which is the sort of area that goes all the way around Berlin, but this has been a very safe SPD Social Democrat territory since the reunification of the country in 1990, right? They have held this part of the country since then uninterruptedly. So if they were to lose, and particularly lose to a category of political party, the AfD, and this chapter of the AfD is considered by German intelligence services to be an extremist right-wing group, that would be obviously hugely significant. The fact that they have not lost it, they only won it by 2 points, however, is, yes, some reprieve from Olaf Scholz, but it is not perhaps, it's not the worst case scenario, but it's not entirely good news. They're still only 2 points ahead. And this is also Olaf Scholz's own sort of home constituency of Potsdam. This is an area where the economy's been doing a little bit better. That might be part of the reason. Brandenburg's been growing at about 2.1%. That's the number 2 in all of the sort of areas of the country. But when you look at the national election, which, by the way, is a week and a year away from right now, you have to look at the sort of soundings nationally that really you do not see the SPD doing very well at all. You see the CDU as sort of the number 1 party right now, and number 2 right now is the AfD. So there's going to be a question about how can Scholz turn this around. When you look at the rest of his coalition, Jumana, both the Greens and the FDP didn't get enough votes in the Brandenburg election to even be in the local parliament.
Wow. Yeah, definitely something to bear in mind. And we're only about 12 months away. And of course, other pressures are mounting on the government, not least the whole Unicredit Commerce Bank situation. But let me just bring it back to Brandenburg now. How much did the question of immigration once more get factored into this particular election?
Yeah, Juman, I think that this has been a sort of major issue for German politics over the last couple of years, and it's one that is only sort of exacerbated as the economic situation starts to degrade somewhat here in Germany, to the point where you have a very sort of open coalition government of the Greens, the FDP, and Olaf Scholz, the Social Democrats, who are beginning to crack down a little bit on immigration, in part due to these sort of forces on both the far right and the far left that are sort of forcing them into those kinds of decisions. We saw them install, for example, border checks on all 9 of their land borders last week, including the border with Denmark. And we caught up with the Danish Prime Minister, because when you look at the sort of number of immigrants and refugees that Germany has, right now it has one of the highest levels of refugees it ever has had in its history. It's about 4% of the population, about a third of those from Ukraine. But speaking to the sort of Danish Prime Minister, this was interesting because she is also a social democrat, but he gives a very sort of different view on how to deal with immigration. Have a listen to what she had to say about how the tide is changing in terms of European policy towards immigration.
Yeah. And actually, we played some of that interview a short while ago, Oliver, exactly when she made those comments. So thank you for bringing us that interview as well. Super fascinating to see how the shift in sentiment is moving in Europe these days. Bloomberg's Oliver Crook. Meanwhile, in France, Emmanuel Macron's newly appointed French government is under pressure on multiple fronts, raising the risk of a swift collapse. Prime Minister Michel Barnier's cabinet needs support from the Conservatives and centrists, who have not always worked smoothly together. The left-wing party holds the largest number of seats in the lower house, but was left out of Barnier's cabinet. And coming up, Zimbabwe's 6th attempt at a stable currency in 15 years is facing fresh challenges. We have the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Zimbabwe's central bank is considering using the country's reserves to protect the gold-backed currency against severe market disruptions. The governor is also pledging to maintain a tight monetary policy stance to ensure exchange rate stability and durable inflation. For more on this, Bloomberg's Andira Ganga joins me now from Kigali. Andira, first of all, just walk us through what this central bank is proposing, why they have come to this decision, and also how stock markets have reacted there.
Jumana, so the central bank is attributing this depreciation to a demand-supply mismatch in the market. They're saying that the farmers are gearing up for the planting season, hence there's high demand for the dollar in the market. And this leaves a large supply of the local currency in the market. This money is ending up in the stock market. And that's the reason why we are seeing this surge. Since late August, the all-share index has risen by 28%. And this yo-yo effect is nothing new in Zimbabwe. If we go back to 2023, they were home to the world's largest rally at 800%. This was a time when consumer prices were over 100%. The currency had lost nearly 80% of its value to the dollar, and nobody was accepting it in terms of transactions. So again, the stock market became an alternative place to hedge this money against inflation and volatility. However, 2024, they launched a new currency, the ZiG, and again, 330% of market value is wiped off, leaving investors to deal with the fallout. And this currency is their 6th attempt at a functional currency. And though it started quite well, it has lost consecutively to the dollar for the last 18 days. The central bank understands this, likely to keep the monetary policy tight, but also they've injected $64 million into the market to try and mop up excess liquidity.
And of course, this isn't a specific issue. FX volatility is not a specific woe that is unique to Zimbabwe. How are other African countries coping with this, especially in light of the most recent hiking cycle out of the Fed? Of course, they started cutting now.
Jumana, you're absolutely correct. If we look at Nigeria, the outlook for the Naira is very fragile. When President Bola Ahmed Tinubu came into power, he introduced a raft of reforms, liberalization of the FX market. They also removed subsidy on things like fuel, and this caused socio-political tension in the country. So the government has been slow on reforms, and then their problems have been exacerbated by the prices of oil in the international market. And Oxford economics say that the bone of the contention here is that the naira was never allowed to adjust at its real value. Hence, it went from being overvalued to being severely undervalued. The same applies to Angola. Their currency has lost nearly 12% of its value to the dollar. But then again, this is an economy where 60% of its budget comes from oil, and the international prices are not helping. The central bank will not intervene. They say it's immature, and they have to keep servicing their debt. Zambia is also having quite some issues. They've gone through a national drought and they're depleting their resources on imports of food and energy. And so their currency is also likely to remain weak because copper prices in the international market are not doing very well.
Fascinating. Ondiro, thank you so much for bringing us the latest on Zimbabwe and other countries around Africa as well, and what they're trying to do to support their local currencies. Okay, well, a quick look at markets before we head out for the day. And equity futures are pointing towards the green. We had that PBOC reverse repo rate cut at 10 basis points coming through overnight. So that's lifting Asian equities. And you can see that's also having an impact on equity futures here. S&P and the Nasdaq seen opening up in the green. Euro Stoxx futures also up 0.5% as well. And a quick look at oil, too. We have spent a good part of this show talking about the geopolitical developments in the region. You can see that Brent is up 0.8% today as it factors all of that in. But that was Horizon's Middle East and Africa. I'm Jumana Bersachi in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.